Chris, what a pleasure to meet you. It's quite serendipitous, actually.
It's great to be here, Adam. Thank you for having me.
It's my pleasure. And so I contacted you last week about an opportunity zone opportunity. And it wasn't relevant. You very kindly came back and you said, well, I'd like to be on your podcast. And so I thought, well, who is this guy? And I looked into it a little bit. We had a bit of a chat back and forth, and it's clear that you have some pretty decent experience in not just crowdfunding, but crowdfunding online, raising money online. So I would love to know a little bit about the background to how you got there. And I think my first question would be, what's your biggest challenge? What was the biggest challenge you had starting out online?
Well, for us, a number of challenges. In a nutshell, what our company does is we're an online platform for doing syndications, raising capital for farmers. And so our big channels, or our biggest challenges were multifold. One is people are familiar with real estate. People are familiar. There's a number of real estate platforms, a large number of real estate platforms on there for all sorts of niches of real estate. But there was when we started back in 2016, there was very little interest in agriculture as an investment class, at least on the retail side. So building up an audience, starting from scratch as a pioneer in a field is always a challenge. The next set of challenges for us is just getting our name out there, building both in the farming and agriculture community and in the investment community. And then I think the final one, just briefly, is just the regulatory, getting our arms around the regulatory regimes involved with raising capital online and publicly.
All right, so we'll talk about digital marketing then in a few minutes. I mean, let's really drill down on that, because you've actually been doing a pretty decent job, if I may say so. I've had a look at your platform. It's not too bad, actually. Relative to a lot, you're way ahead. So my first question is, actually, it's not my first question. I've already asked you my first question. But what comes out of that is interesting to me is who traditionally invested in farming. You're quite right. It's as far as I can tell, completely absent from any of the crowdfunding platforms that we see out there, right? Multifamily offices, hotels, and what have you. Everybody understands that. Right. Farming is that aspect of real estate that itself is kind of in its own class. I mean, obviously, but it's beyond people don't think of farming as being real estate. They think of anything with a building on it as being real estate. So tell me, how is farming traditionally capitalized?
Well, I'd say first, farming very much is real estate. So it's tangible. It's generally a piece of land, although we do have indoor facilities. We see those more and more. So there are a lot of commonalities with real estate investment. There's some differences as well, of course, but some commonalities. But I would say traditionally there's sort of two types of agriculture or farming investors. The first would be institutional. So if you look at the investment portfolios of large institutions such as pension funds, university endowments, maybe very large family offices, they all have some small portion of their portfolios, some actually quite large, allocated to natural resources, including agriculture, farming, timberland. The second investor that you commonly historically see is the farmers themselves. So the vast majority of here in America, the vast majority of farmland is owned by retired farmers who don't actually farm the land. They cash rent it out to people who do the farming, kind of another generation of farmers. But most of that land, most of the farms in the US are still family owned. They're not owned by institutions, and most are absentee owned. They're owned by someone who farms them out to other people who operate them.
And the structure of when you finance a farm, I kind of need to understand this before we can talk about the challenges of digital marketing, because it's really absolutely brand new to me. As it happens, in the last few years, I've moved into an agricultural area. I'm surrounded by farms, and I mean, absolutely love. I wouldn't swap it for the world now, having lived in some of the biggest cities in the world. But I don't have any real understanding how farming is financed. So I understand if it's something I presume you also do understand, is how, for example, a value add multifamily apartment building would be financed. So you got debt, you got a business plan, and then you need equity to fill the gap, right? So the sponsor puts in some money and then raises the rest online these days. What does it look like from a farmer's perspective? What are they raising money for?
So farmers the farmers that approach us are generally fall into two categories. One would be those existing farmers who are trying to expand their operation. They need new land, they need new infrastructure, possibly equipment, some sort of capital need. The second would be sort of a brownfield development, if you want to use a real estate term, where they're starting with a piece of land and they're going to transform it into some sort of crop production or livestock production, whether it's raising grass-fed cattle on it or building an indoor greenhouse. As far as the structures go, my background is commercial real estate investing. So I've invested in multifamily, single family, office buildings, all those. So what we do is a little bit unique here at Harvest Returns, is we structure our investments more along the real estate side. So traditional agriculture investing is like a farmland REIT, which is going to go out and buy thousands and thousands of acres and pay someone to operate on that and then basically pay them rents. The model that we tend to do is where we will bring in equity, and in some cases debt investors. They'll invest in an operating entity, and those investments may be combined with other sources of capital, whether it's equity or traditional financing debt, and to produce a return for our investors.
And now let's kind of migrate into crowdfunding, because this is really where I'm interested. So I really know nothing about this field, so it's completely new to me. So you have to forgive me for not understanding anything. But what's interesting about that is that presumably when you go online, you're dealing with a lot of people like me, right? Who also have no idea, right? It's kind of intriguing, but the things that race through my mind are, well, what about risks, right? If there's not enough rain, too much rain, right? It's like, how do you actually underwrite that? So let's talk about that, not the actual DNA of the deals, but how do you communicate with prospects? And let's start on the investor side, because of course you've got the farm side as well. But when you first start communicating, when you first started, actually tell me about the pathway to going online, how you got into this, and then how do you communicate with investors? Tell me about the way you do that to, bridge this gap.
So the way we got into this was, as I said, I've been a long-time real estate investor. After the sort of corrections in the real estate field in 2008, 2009, I started looking to diversify my portfolio into something else. And I've always been very curious about different types of investments, whether it's real estate or equities or whatever. And I've just had a very broad appreciation for the investment spectrum. But like you, I used to live in a city and I moved out to the country. So I was surrounded by farmers everywhere. Combine that with my interest in travel, and I've traveled extensively around the world and saw that in other parts of the world, people are much more in tune with food production, because they have to be. They can't just run down to the local market or restaurant and buy any and everything they want produced 365 days a year. They're relying on agriculture. They're either buying their products locally or growing it in their own properties. So that newfound appreciation and interest in agriculture and food production, combined with the emergence of crowdfunding, caused us to start the company in 2016 and combine the two and sort of become a pioneer in the field. And I had invested via some of those real estate crowdfunding platforms, so I knew the mechanisms. As far as investor communication, I think a big part of our job is education. So like you, many of the people we talk to didn't even know they could invest in farming. They didn't know the why about it. They don't understand, like you said, the risk involved, nor the mechanism. So a big part of our mission is to educate investors, the investor population, primarily the self-directed investor population, not those that just dump their money into a 401k or whatever mutual funds their advisor recommends, but people who are interested in having more control over their investments, teaching them about various types of farms, agricultural production, the risk involved. We have blogs, we produce content, we go on a number of podcasts like this. We love podcasts. It's a great way to get the message out. We love the podcasters. Various types of, we write articles for various publications, and we occasionally attend either investment conferences or, on the agriculture side, farming conferences. So that's education is number one for us.
Fascinating. So what made you decide, though? I mean, it's and I looked at your LinkedIn profile, so I do know a little bit more about your background and how you ended up traveling quite as extensively as you did, presumably. So to put these two things together and to decide to go online, was that something, digital marketing, which is really the business that you got into? It could have been, theoretically, really could have been anything. You chose to market agricultural investments, the ability to invest in agriculture. So what did you know about digital marketing when you first started? Tell me about that, and then how you actually started to build your platform.
So a couple of things. One, as someone who invested in a variety of things, I appreciate being marketing to, but I don't appreciate being sold to. So those of us who have been investing for quite some time remember being cold called and dialing for dollars, that sort of thing. And there's still a lot of real estate syndicates that do those sorts of things to raise capital, and and some it works. But me personally, I'm busy. A lot of people are busy. They don't like being cold called. They don't like being a hard sell timeline, those sorts of things. So I appreciate the digital aspect, because you get to choose what you see and what you don't see. And that said, the other side of that is, as a marketer, digital marketer, and I must say, it's not just me. I have a very talented person on my team named Allison Spence, who does the preponderance of our digital marketing, social media, all those sorts of things. But rising above that noise level in today's investment marketplace is a challenge, as we all know. So I think because we have sort of a niche product that helps us, because we're unique. We're one of the only few companies that are doing this sort of thing in this space. That's very helpful. And because we're a pioneer in this field, it's also helpful.
By the way, occasionally I will type. You'll hear me tapping away, but I'm just taking notes to remember. I'm not, emailing anyone or anything ghastly like that. So what do you do? What have you found to be the most effective ways of standing out? And then let's talk about the kinds of education that you put together, from a mechanical perspective. But what have you found does help you stand out in the noise and really get through to people that this is a true, real opportunity to invest in real estate?
Yeah, for us, it's taking a commodity product, meaning food generally, that everyone is familiar with, everyone on this planet consumes. And really, if you look at it, one of those commonalities with real estate, food and real estate, they're the two industries that touch every single person on this planet, bar none. So taking that fact and taking all the demographics behind agriculture, the population is growing. As populations become more wealthy, they consume more protein, they consume more, their food consumption goes up, which is happening all over the planet. Taking those facts and taking that investment thesis and turning it into an educational sort of narrative. And for us, getting that narrative out via social media, via publications and investment publications, journals, that sort of thing, and podcast is how we help to build the brand and build that awareness.
How do you, so actually the question I wrote here was, what's the biggest barrier you find in finding investors and then engaging them?
Mm-hmm.
And it's like it's such an unusual opportunity that you're offering to real estate investors. What is the biggest resistance that they have, and how have you overcome that in terms of the way you communicate online with them?
I think it's primary. Well, besides the lack of awareness that this is an option, and that's something that we're trying to change, is it's the lack of understanding of the product class. Maybe fear, just because they don't understand the risk involved, and explaining those risks and explaining the fact that we pick sponsors who understand how to mitigate those risks involved with agriculture production is an important obstacle that we consistently have to overcome with our investor population.
Yeah. So I'm reading a book at the moment. I mean, another book on this one's on storytelling. I'm absolutely fascinated by storytelling. And actually the first thing that you talked about was education. I mean, it's education, right? It's basically everything we're doing in the digital. We're not selling. Actually, you have to start with education, but good education isn't formally on a blackboard, right? For somebody like in my generation, I'm not the one who said you as well, but formula on a board. It's storytelling, right? And so what I'm really looking for is, how do you engage an audience? I know that I understand the barriers that you have, right?
Right.
People don't know, they're not aware. So what techniques are you using to break through that and to capture their attention and bring them into your funnel?
Sure. Well, the lovely thing about agriculture and farming is that it really lends itself to storytelling, and the sponsors that we work with tend to have some really great stories. For example, we're working with a military veteran and his wife up in Virginia who own this absolutely beautiful lavender farm, and lavender is one of those types of agriculture that no one really thinks of, but they've got a great story to tell, and we do that in some cases via YouTube videos. That's also the way we like to communicate with our investors, whether we're promoting during the promoting deal sort of phase or while we're updating them. So we also have a young man in Florida who is growing bamboo sustainably on some what used to be orchard fields that are now defunct because a lot of the orchards have died out due to various types of diseases. But and this man makes YouTube videos of him preparing the land, and it's a great way to tell stories. So you can actually see the farmer doing what they do, and most farms in the U.S. are still owned by families. So there's a family connection, and I think that's really important as part of the story narrative.
Okay, so now we have some stories that are capturing the attention, right? People are interested and they're drawn in, but we're not selling a little, forgive my total ignorance about exactly the right word, but we're not selling a bushel of lavender, right? For $5 or whatever it happens to be, or a bunch of lavender. Not sure what the collective term is. But we're actually, or you're actually soliciting tens of thousands of dollars to invest in that. And so now, once you've captured attention, what is your process for moving the educational dialogue through your investor journey into the, how the heck am I going to make money out of this?
Yeah, and that last point that you made is the most important. Is like, how does this company, this agribusiness, make money? So we have to show that both on the financial side, but also from a narrative standpoint. And the finance is pretty black and white as far as.
Is it though? Wait a sec. So hang on, that's a big statement. Is it black and white?
Well, you're right in that. your listeners are probably familiar with, let's say, multifamily. You mentioned that. You've seen one sort of multifamily value add. You've seen them all more or less. But for us, you've seen one farm. You've seen one farm. They're all quite unique propositions.
It's very funny.
Yeah, it is. I mean, for both the weather, the terrain, the local market, not to mention the specific commodity market, plus all the other variations. So, for example, we have done a couple of grass-fed cattle deals, different parts of the country. Well, grass-fed cattle is unique in that it demands a higher price because there's a strong consumer demand for it in the United States right now. The majority of grass-fed beef production occurs outside the United States, so it's imported into the U.S. So we're working with some of these producers to grow the domestic market here and build, humanely raised meat products that taste better, are arguably better for you, lower in fat, higher in some essential minerals and vitamins and all the other things that go along with grass-fed beef versus grain-fed beef. And by doing, the education piece of that is just letting our investors know that this is an option. You can not only, make money by investing in something like this, but also be more in touch with the food production. And you can even, it's like people that buy publicly traded stocks, for the most part, they tend to use, you invest in Apple, you've got an iPhone. Well, you can invest in a farm and visit that farm and even use the produce from that farm, in your daily life, depending on geographies and that sort of thing.
Right. So this is very interesting. And again, we've come to drilling down on the idea of how do you communicate what it is that you're doing. And there's an interesting dichotomy actually here, because, and this is what I'm interested in hearing how you break through, because you said that farms, you've seen one farm, right? So but I take that slightly differently. And that is that when you've seen one multifamily deal, because of the way that crowdfunding has changed the industry, before you would see one crowdfunding deal before the Jobs Act, right?
Right?
The only way that you could invest would be if you knew somebody who was developing a multifamily deal.
Right.
So you were kind of locked into this heavily bounded private network. And these were likely the only deals that you would see, right? You'd see the guy at the country club and you'd be able to invest. And so you were subject only to his pitch. Now you can go online and you can see, as though you were at the grocery store, a shelf of dozens and dozens of multifamily deals. So you are able to compare and contrast one against the other. They have almost become, please forgive me, those clients of mine that do multifamily, they do it first class very, very well. And there are, of course, standouts. But it's almost become commoditized, right? People really understand it. And yet, your industry is literally a commodity.
Right.
And yet, we cannot compare one farm against another and the underwriting for one farm against another. So from an investor perspective, that's an enormous barrier. How do I know that the numbers I'm being shown are consistent with market norms, for example?
Sure. Yeah.
How do you cover that barrier? Yeah,
that's a great question, and I agree with that statement to a certain extent. On the other hand, those market inefficiencies are opportunities. So just the same as when one's investing in a stock market, everyone's basically got access to the same prices and products and market knowledge, financials, P&Ls, that sort of thing for those publicly traded companies. One, with private investments, we know, whether you're investing in commercial real estate or agriculture or whatever, that there are those inefficiencies in the market which can drive higher return profiles. As far as comparing apples to apples, because we are starting to build some sort of sub verticals on the platform, one being grass fed, another being indoor agriculture. We're starting to gather these data that are able to show investors multiple variations on the same theme that will allow them to make those decisions. And it is very unique. And there are, for most people that invest with us, it's the first time they've ever invested in an agriculture product, although maybe they've invested in real estate or whatever. But there's a draw to it because it's so unique. And as long as we can illuminate the risk involved and obviously disclose as we need to and have to disclose those risks, that those potential investors can see that they are going to be able to make the returns that are promised by our sponsors. And in the vast majority of farms that come to us, unfortunately, we're just not able to help them because they don't kind of pass our screening criteria onto the platform.
I see. And then you articulate what those screening criteria are.
We do, and it's for the most part, just in a nutshell, we're looking for not only experienced agronomists, experienced farmers, or maybe the principal doesn't have the experience in farming, but they have a team that does, combined with a level of business acumen and savvy, marketing savvy, whatever the case may be, depending on what they're producing, that will enable them to execute on the business plans they've put together.
I'm unfortunately writing far too many questions, Chris.
That's okay.
I know we're going to run out.
Yeah.
I'm absolutely fascinated. So I might jump around a little bit. It's kind of might seem random, but there's some big questions. So I'm intrigued by the space that you're in. Mm-hmm. Is there anybody else doing ag financing for crowdfunding? Are you the only game in town?
There are a couple of platforms. When we started, I would say we kind of were the only game in town, but there's some other sort of niches out there. A company called Acre Trader that primarily does row crops, so it's a more traditional flavor of farming. Another company called Farm Funder, which is geographically focused in California. Some great investment opportunities in both those companies. Another company called Farm Together out of California that's doing some sort of similar to what we're doing, but they're all a little nichey and they've got different verticals. And it's a space on the agriculture side that there's just, I'd say, massive potential, because farmers are fairly dissatisfied with the existing farm finance system that hasn't changed a whole lot in 50 years. But on the investor side, I think there's plenty of space for us all and plenty of room for the competition.
Oh, yes. Crowdfunding is 4 years old, basically, since the laws were promulgated.
Right.
Barely started. So I'm going to kind of very briefly describe an experience that I had and ask, because this would be the kind of thing that would make sense to me as an investor without knowing much, without getting into the DNA of how you make money in farming. Mm-hmm. But many years ago, I'll try and do this as fast as possible. Many years ago, one of my closest allies when I lived in Japan was a fellow called Den Fujita. And he was the only person that Ray Kroc had given a country license to for McDonald's. Mm-hmm. And he was growing so quickly that he needed more bread products. Mm-hmm. And so he actually flew here, and I met with him with a company called Fresh Start Bakeries. I think they billed themselves as the biggest baker west of the Mississippi, and mm-hmm. all they produced was product for McDonald's. That's all they produced. It was mm-hmm. exclusive. That's a whole mm-hmm. different story. It was fascinating. So if someone came to me and said, yes, we supply that company, right, and they are growing at this rate, that to me would have a foundational, some kind of intuitive foundation for growth mm-hmm. that I could anchor with something that I do understand, right? The commerce and the big company. It's almost like a credit rating in a way. Is that something that anyone's doing, or how do you deal with that kind of that equivalence, if you like, of credit versus non-credit sponsors?
Yeah, I mean, to us, that what we call in the industry the offtake agreement, that they're going to have solid customers and contracts in place to purchase whatever they produce, because you can produce a lot of food and if nobody buys it, it's going to all rot. So that's huge for us. And, some examples are two different indoor operations that we funded. One up in Kentucky that's got a distribution agreement in place with a major regional grocery distributor that's going to serve kind of the greater Midwest United States, versus a very local, smaller scale hydroponic operation in North Texas that is selling its products to sort of Michelin rated restaurants in the Dallas area. So different scales, but still the same sort. Another example, you mentioned sort of the McDonald's model. We haven't done business with them, but we've spoken to a producer up in Canada who is supplying grass-fed beef products to A&W retail chain, and that chain happens to have switched 100% to grass-fed beef. So there's this huge unmet demand. And we see that more and more, where if somebody's growing something organically or grass-fed that they just, or cage-free eggs is another example, that there's just not enough producers out there. And that's where we see the opportunities for an investment side.
Fascinating. All right, so let me ask you some quick bullet points, if you don't mind, just
Sure.
to get my head around the business that you're in. So what is the typical size, or what is the range, I suppose, size of the deals, and in terms of total dollar and total equity? Like, how's that break up for you?
Yeah, so dollar size, our smallest raise has been about 150,000. Our largest raise has been about 600,000. We hear from farmers routinely in sort of the 200,000 to 2 million range. We see that sort of as an unmet market. Anything above a few $1,000,000, there's private equity companies that are investing in those sorts of deals. Anything below a couple $100,000, one, it just doesn't meet the economies of scale on our platform, but two, it's kind of more of a hobby sort of farm. And I believe the second question you asked, the size of the deals equity-wise. So that also varies from, for example, the greenhouse I mentioned in Kentucky, that was like a $14 million project. So besides the $500,000 or so we raised, there was a large single private investor along with significant bank financing. So the scale of the actual companies we're investing in can vary quite a bit.
And gosh, I'm going to sound terribly ignorant, aren't I, when I ask this question? So there's a lot of private equity investing as well in agriculture. So presumably you can pivot off how they underwrite farming to educate your investors as well, because that's a really good source for thorough, diligent underwriting, presumably.
Yeah, and in the case of that greenhouse operation, that large 14 million or so greenhouse operation, when someone else writes a check for $5 million or a bank underwrites it for $5 or $6 or $9 million, it's quite easy to convince somebody to invest $10,000, $20,000, $50,000 because there's obviously someone taking a much more significant risk that's got a lot more at stake.
Yeah, but that applies to every kind of crowdfunding. That's not unique to.
Of course, right? Yes.
It definitely helps. Right? If you were to say, "Gosh, there's no other investors and the banks won't touch it," it's going to have a hard time.
Right.
And what kind of returns? They're structured the same as multifamily and office, like a pref and a to a promote or something.
Yeah. So sort of sometimes we'll do a preferential. We'll take that promoter or carried interest of 10 to 20% in our equity deals. The IRRs generally anywhere between, there's a couple kinds of deals. If it's a sort of existing deal, or a lower risk sort of thing, we're talking, 10 to 14% sort of low double digit types of returns, which I think is fairly common in commercial real estate investing. For some of the deals we do that are more, I'd say momentum based, you're going to see much higher returns. So right now, hemp is a very hot investing field because of the demand for CBD oil is just insatiable right now. So we've done some deals with a north of 50% IRR. Remains to be seen if we can execute on those. But I looking at the projections, it seems reasonable. It's more of a, what I would see as sort of a venture type of investment, higher risk, higher return.
And Exits.
Yeah.
Do they have exits? I mean, I think of farming as being, if you're investing in a lavender, farmer,
Mhm.
are they ever going to sell? I mean, sounds to me, look, sounds
Yeah.
like cottage industry kind of thing.
Yeah. So the exits is something that we work really hard to do with each deal as we're in the structuring process, and that is where I sort of fall back on my real estate investing development experience, where traditionally you bought a farm investor is going to buy a piece of land and sit on it for decades, if not generations, and pass it down to their family. That's just the way most farming has worked. We are starting to structure these deals more like a commercial, say a commercial real estate offering where, say 3 to 5 years on average, if it's a development sort of project, based on the cash flows or the potential to refinance that business, our investors are cashed out at a targeted IRR sort of situation.
Oh, that's interesting. All right, so let's kind of get back to, it's like I said, I know I could end up talking to you for hours and hours, but let's kind of migrate towards wrapping up with some questions about exactly what you do to get your message out there and what you found to be the most active, the most effective, I should say. So what have you found to be the most effective? Is it YouTube? Is it LinkedIn? Is it Twitter? Is it written articles? Is it video? Is it podcast? Like, what have you found to be the most effective?
I'd say, so, we have 2 customers on the farmer side. There's a lot of farmers on Twitter. Social media is a good place to capture farmers, but they've also found us on very agriculture specific podcasts, and they also tend to read our press release. So, for example, if we do a successful hemp deal, we're going to be inundated with other people who want to raise capital for hemp because we've proven that we can raise capital in this particular market niche. On the investor side, we do focus on social media more from that education standpoint to do some digital advertising as well. But I think where we really get our leverage is investor-oriented podcasts and also, articles. We've been in MSN, Yahoo News, Yahoo Finance, local, regional, national outlets.
Fascinating. Oh, am I on mute? No, I'm not. I thought I was on mute because I've got a bloody machine in the background here. So I must put you on mute. And do you do any, have you bought lists, mailing lists, and done anything like that?
We dabbled in that early on and saw limited value. The beauty now, so we do, what I didn't mention was email is huge for us. So obviously to do email well, you need to have a list. Our email list has primarily been from people who have self-selected that they're interested in agriculture. So they've already sort of qualified themselves as, hey, at least I'm curious about this. Maybe they haven't invested, maybe they don't intend to invest, but at least they're curious.
Well, when you say, sorry to interrupt, when you say self-select, does that mean they've signed up for your list or because you found them?
They signed up on our platform. So we drew them to the website, in whatever way that funnel occurred. And then they sign up to learn more. And then they're on the list and they're able to, after going through some compliance steps, they're able to see the offerings.
And one last question on this. What is your investor avatar, do you think?
We think it's significant. It's hard for us to quantify. We do investor surveys every year to find out why people are investing. But we've had the smallest check we've received is $5,000. The largest check we received is about close to 200. We've had multiple investors who have invested in 2 or more offerings. So we see it's only going to, in our growth rate on our subscribers, our investor subscribers continues to grow, like 150% annually, somewhere thereabouts.
And you're finding people, one of the first things you said was that farmers invest, but are you finding people from the urban areas also investing?
Yes. There's a strong desire these days for people who are not, from an agricultural background to get in touch with the food system. And we see this primarily manifested by rapidly evolving consumer preferences for food. The food industry is becoming very fragmented, And because of the food industry, the dietary needs are becoming very fragmented and specialized. Agriculture producers are struggling to keep up with those rapidly returning things. So our platform provides a flexible, agile source of capital for those particular producers.
Chris, you are a fascinating gentleman. I am so very happy to have met you. Let me ask you 3 rapid fire sign-off questions that I ask all of my guests.
Okay.
The same questions. First, you just started fairly recently syndicating real estate online. Mm-hmm. For somebody who is about to start syndicating real estate online, what's the most important thing they should keep in mind?
I'd say once you get all the mechanics in place of what types of deals you're going to do, what products and the mechanism, whether it's a technology or however you're going to get that presented to investors, figure out how to stand out from the crowd. And that's easier said than done, of course.
Second question, what's been the hardest lesson you've learned online?
For us, it's not necessarily if you build it, they will come. It's if you build it, that's when the work begins to educate those consumers and those potential investors.
And my final question to you, what are your personal key daily habits that keep you successful online?
So reading, I'm on a number of email lists like most of us are. And so reading that industry news, whether it's on the investment spectrum or the agricultural spectrum, staying up to date on what's going on and following the trends. So that helps me project forward, which is always got to be forward looking in this business.
Chris Rawley, Harvest Returns, an enormous pleasure meeting you. Thank you so much for being on my podcast.
You as well, Adam. Thank you for having us.